We get a lot of clients asking about the gold price, where it's going, where it's come from, of course, and why it's moving in the direction it has been moving in recently on the way down. But this brings about a lot of questions, and it raises a lot of what some perceive are misconceptions about investing and trading in the gold market. Well, let's pick up now with some more detail about a specialist in this sector. It's Simon Popple from Brookfield Capital. Simon's been in the gold market donkey's years, and I've been talking to him over that period. Simon, welcome. It's great to be able to catch up with you again. I noticed recently you have written a paper recently called Three Misconceptions About Investing in Gold. We thought we'd catch up with you because it certainly seems like this could well be an opportunity for us to retouch on this subject, which so many people talk about so much of the time, and I know that you deal with. Introduce the subject for us, first of all, about where we are and this idea about investing in gold.
Yeah, no, absolutely. Well, I mean, gold is one of those, I describe it as an asset class. It's a new asset class for most people, but it's been around for thousands of years. And, we use gold in our everyday language. You talk about they've been as good as gold, or I'm looking forward to my golden years, or I don't want to marry them, they're a gold digger. But very few people have got any. And I'm on a bit of a quest to change that. And what I want people to do really is to at least have an account open and have a minimal amount of gold or even silver or platinum, palladium, doesn't matter, but have something in the account. It won't cost you much, probably 30 or 40 pounds. Yeah, just have something. And it just means that if there is ever a panic, for want of a better term, at least you've got an account set up. And if there is a panic, I should think that there'll be a very long queue, certainly thousands, potentially hundreds of thousands, potentially millions. And I don't think it's a queue you really want to be in. So
No, and
what I've done is I've written a book about investing in gold.
Yeah, well, I'll pick up on the book in just in a minute, but I've heard it before to say that gold or the precious metals market should act as a ballast in a balanced portfolio. I mean, I guess at some points you would want to increase that ballast. So let's hope that people are already invested in this market. So the point about why gold, I guess, is sort of we've already sort of touched on that, and you're telling us about how we can be exposed to it. About these three misconceptions, I think we ought to go straight to this and your paper on this, and explain more about what you have to, or what you can say to overcome these misconceptions.
Absolutely. I mean, I think the first misconception is, if you buy physical gold, you'll have gold lying around the house. And it's just not true. I mean, I've been involved in the market for probably almost 20 years. And I've never, ever had any gold in the house. Basically, you can buy it, store it with the people that you bought it through, insure it with the people you bought it through. And for me, it's a very good cash management system. You've got money in your bank account. And if you've got money sort of elsewhere, let's say in gold, obviously you're taking a risk on the gold price, but it's money you don't spend. And in my case, I use it for my daughter's school fees, but I'm sure people have got a lot of other reasons for investing in gold. And it just means that you've got money sort of within sight but out of grasp. And I like that. And I think the other thing to say is there's lots of different ways of investing in gold, but if you're starting off and you've never done it before, I'd suggest you probably look at the lowest risk route.
And of course, gold,
yeah.
gold in the main market is, of course, priced in dollars. We do hear it quite often quoted in sterling, obviously here in the local market, but you do enter a currency risk, don't you?
Yes. Well, on the one hand, there is a currency risk, but on the other hand, gold has performed very, very well against fiat currencies. I mean, one of the things I love about gold is, you can't print it. And because of that, gold has actually done very well against most currencies. And so, if people want to have a look at that in perhaps a bit more detail, if they download the report that I'm going to canter you through, I've got a table in there which has got gold versus probably about 10 different currencies, which I think they'll find very interesting.
Yeah. Let's get on to the second misconception, which you highlight is the fact it doesn't generate any income, which is true, really.
Yes, I mean, I think if you're talking about physical gold, um, no, it doesn't generate any income. I think that uh, you may want to try and be creative and obviously hope it goes up in value and then sell some and then you've got some income. But what you can do as well is you can buy shares in some of the largest gold companies that pay dividends. And Newmont, I don't know what its market value is today, but it's something in the region of sort of $33 billion. It's a large company, so larger than a lot of banks. And so what you can do is you can invest in a company. I think it yields about 3.9-ish% in terms of dividend. But there's also potential for capital gain. So if the share price goes down, it may be just get the dividend yield. But if the share price goes up, you've got an opportunity to not only get the dividend, but also you may want to sell a few shares and get a bit more income. So I think that people do need to sort of be a little bit creative if they want to get involved in the market and not discount gold from the get-go because it doesn't generate an income.
Yeah, and your third misconception is the risk element to this, and the fact that people say gold is really risky. There is an element, I mean, there's an element of risk to every single investment, of course. But how do you counter that point?
Yeah, well, I think that, again, funny enough, if you look at the currency chart in the report I put together, gold has performed phenomenally well against a lot of currencies. I think since the IPO in the 70s, I think the return each year has averaged. Now, this is not the return you get each year, but this is an average of over the last sort of, I don't know, 30, 40 years, 10%, which is pretty good. And so I think that gold, yes, you take a risk on the gold price, but providing it's a relatively long-term hold by you, I don't think there's a huge amount of risk attached to it. And a lot of people think it is risky. And one point I talk about is the all-in cost of production is sort of around $1,300. And if the gold price is, let's say, 1850, you've got about $500 downside. And this is logic, but logically, if it goes below 1300, I think quite a lot of people will stop producing gold. And if they stop producing it, supply goes down, basic economics, the price should go back up. So yes, there is downside, potential downside of I'd say $500-600, but there's no ceiling, and I like the idea of investing in something where the downside is perhaps losing I don't know around a third of your money, but there's no upside. So there's no ceiling. So if gold really does take off, then it could be very happy days.
And of course, the point to be made here is, again, we've discussed this before, isn't it? That every dollar increase in the price of gold, those companies that dig it out of the ground, that's pure profit. So that's something that they can work against as well. So that gives you an extra element if you're investing in equities. Which takes me on to the other point, is how do we invest in this? Because you mentioned the fact that people don't have gold lying around the house. They pay someone else to look after it and insure it and take care of it. That's physical gold. There is paper gold as well, isn't there? But of course, there's also currencies, or rather gold sovereigns and so forth to invest in. What are the different sorts of gold investing mean for a portfolio?
Well, I mean, I think there's lots of different ways you can invest in gold, and each method has got risks attached, obviously. And so I think it's important for people to think about risk first, how much risk they want, and then look at the returns thereafter, because at the highest risk you've got the juniors, and a junior could go up 50, 60, 70, even more, but there's huge risk attached to it. So it's not something that I would do I have some? Yes, I do. Have I had some great returns? Yes, I have. But I wouldn't want to put all my money in there. I think just having a little bit of money in those juniors, and then if they come off, it's amazing. If they don't come off, it doesn't matter that much. But yes, there's lots of different ways you can get involved in the market. That's one of the things I cover in my book. And so, what I do, for example, is I use a fantasy football type format. So I have a goalkeeper, which is a very large multinational company. Then I've got defenders, which are large companies, midfielders, which are probably new to production, and forwards, which are out and out explorers. So I think it's very important to have a balance. And I think this is one of the problems investors have. They want to get everything right, and I think you have to understand you will get some things wrong. But the team that wins the league rarely wins all the matches. And they probably lose a few as well. And so to be a successful investor, you don't have to get everything right, but you just want to have a strategy that sort of leads you to better results.
Yeah, let's bring up a chart of the price of gold and talk about what's happening at the moment. It's been down. Anybody that's been following this, here we are now talking about this on the 5th of October. We've got these declines we've had. We've seen this very strong dollar, which my understanding is behind some of this move down. What do you say to people about picking your time about getting into the gold market?
Yeah, I mean, I think it's more important to have time in the market than timing the market. If you get my point, I think it's yes, you can get it right, but I would urge people to sort of get involved. If they're worried about buying at the top, they can always sort of allocate their money over a period of time, so the average cost in. And so if the price goes up, then yeah, they pay a bit more. If the price comes down, they pay a bit less. But I mean, going on to the next graph that I'd like to talk about, if you look at the gold price and debt, as debt's gone up, over time, the gold price seems to have followed it. Clearly it's not a perfect correlation, but I haven't heard any arguments for the debt coming down. And so if the debt continues to go up, I'd expect the gold price to go up. Obviously, we don't know, what it will be, but this chart here would indicate that it could go sort of higher rather than lower.
And of course, we talk about gold being a hedge against inflation, don't we? Which is, of course, sort of all wound in with this same point. Let me just quickly return, if I can, to your book and return to this beginner's guide. What do you say then, as a sort of to wrap it all up and point people in the right direction?
Well, I mean, I think gold is there's no perfect hedge against inflation. I think we need to sort of be very honest and upfront about that, but gold has actually performed pretty well at maintaining your purchasing power. And so I think that it's certainly a tool that you could use in the fight against inflation. The stats would indicate that holding it over a longer period rather than the shorter period is beneficial. But given most people have got none in their portfolio, even if they only have a small percentage, I think they should have some. And I think now is a good time to, do something about it.
Mm. Okay, all right. I know, Simon, we're going to leave a link in the description to this to guide people to your website. So if anybody wants to contact you, I guess that's the way to go about it.
Yeah, I think the best thing to do is you can download this 3 misconceptions for free. That doesn't cost you anything. And then if you want to continue on the journey, then it's £4.97 to get this gold package. And then I sort of go into a gold program after that. But if I'm honest, I think a lot of people, they probably just want to start with the book and the gold package and get themselves sort of on the journey.
Okay, Simon, look, it's a pleasure. Thanks indeed for joining us here on IGTV.
Thank you very much.
That's Simon Popple from Brookfield Capital.